Welcome to freedivorce.com.
This is Christina.
And this is Ed. Today we're going to talk about issues related to the division of life insurance.
Ed, are there different sources of life insurance coverage?
Yes, there are two main sources of life insurance coverage. First, you may have life insurance that you have through your employment. Second, you may have life insurance coverage that you purchased privately.
What are some of the basics when it comes to life insurance through employment?
If you or your spouse works for a large employer, there's a good chance some form of group life insurance coverage will be in place. Some employers offer group life insurance coverage to employees free of charge. Other employers offer group life insurance coverage as an option that is funded through payroll deductions. And some employers offer a combination of the two. For example, an employer may offer free group life insurance coverage equal to 1 times the employee's base salary, but the employee can then elect to pay additional money for additional life insurance coverage. Normally, when you get divorced, no value is going to be assigned to group life insurance coverage that someone has through their employment. The issue is not going to be the value of the coverage. In other words, this type of life insurance is not going to be assigned a dollar value. The issue is going to be whether or not the divorce judgment should require the employee to name the ex-spouse or the party's minor children as beneficiaries of that coverage for a certain period of time.
What about private life insurance coverage?
A private life insurance policy is a policy that you or your spouse obtained outside of employment. There are a lot of different names for the different types of private life insurance policies, but most private life insurance policies fall into two categories, either term insurance or whole life insurance.
What is term life insurance?
Term life insurance policies typically have level premiums for a fixed term. For example, you may have a 10-year term policy that provides $100,000 worth of coverage for a fixed premium of $200 per year for the 10-year period. You pay the $200 each year. If you die during the 10-year period, your insurance company pays your beneficiary the $100,000. If you don't die during the 10-year period, then at the end of the 10-year period, the policy essentially ends and you don't receive any money. Typical term policies are for 10 or 20-year periods. An advantage to term policies is that they provide a large amount of coverage at a low price, particularly if you're relatively young. A disadvantage is that your premium payments do not build up any equity in the policy. Most term policies don't really terminate at the end of the term. Typically, you can continue paying the premiums and keep the policy in force. However, after the term expires, the premiums increase enormously so that usually it makes no sense to continue the policy. It is so much cheaper to just go out and get a new term policy. However, if at the end of the term you had some sort of life-threatening illness such as cancer, you may want to continue to pay those premiums even though they're enormous. As with group life insurance coverage through employment, there is typically not going to be an issue about the value of a term policy because there is no equity and no real value in the policy. The policy can have value in rare instances where the insured has a life-threatening illness at the time of the divorce. So, for example, if you had a term policy at the time of the divorce and you had terminal cancer, well, then yes, that policy is going to have a value. The issue with term policies is typically not the value of the policy, but whether or not the divorce judgment is going to require the insured person to continue paying the premiums and designate the ex-spouse or the minor children as beneficiaries for a period of time.
What is whole life insurance?
A whole life insurance policy is very different from a term policy. A whole life policy builds up equity and can have substantial value. The value of any whole life policy needs to be taken into consideration when you sit down and start to divide community property assets. As an example of a whole life policy, it may be a policy where you pay $100 per month for $100,000 of coverage. Whole life policies are much more expensive than term policies, but they build up equity over time. You can cash them in by surrendering the policy and receive a check from the insurance company. Whole life policies have fixed premiums. Whole life policies typically do not have a term. You can maintain the policy for your lifetime by continuing to pay the premiums.
What do I do if my spouse and I own a whole life insurance policy?
If you or your spouse has a whole life policy, you need to find out the value of the policy. The owner of the policy can contact the insurance agent of the life insurance company and ask for a letter that will set forth the value of the policy. When you receive the letter, it may set forth two different values. One value is the current equity value. The second value is the surrender value. Many policies include a penalty or a surrender charge for canceling the policy, and those surrender charges can be substantial. So if you and your spouse decide that the best way to deal with your whole life policy is to surrender it and divide the proceeds, you need to be aware that the amount you will be dividing will be the surrender value.
If we surrender our whole life policy, will there be any income tax consequences?
If you surrender a whole life insurance policy, it can trigger income tax consequences. A portion of the surrender proceeds may be taxable income. Any taxable gain resulting from the surrender of the policy should be split equally between you and your spouse as part of your settlement agreement.
Do I really need to bother with dividing whole life insurance policies?
If you or your spouse maintained a whole life policy for many years, the value of the policy can be large. The value can be tens of thousands of dollars or even hundreds of thousands of dollars. Don't ignore this potential asset. You may not want to surrender the whole life policy. You or your spouse may want to keep the policy. If your spouse wants to keep the policy, he or she could take ownership of the policy at a value equal to the policy's equity. You may want to make an agreement that discounts the value of the policy in exchange for your spouse agreeing to maintain you or the children as beneficiaries of the policy for a period of time.
Are there different types of private life insurance policies besides term and whole life policies?
Yes, there are different types of life insurance policies besides term and whole life. For example, there's something called universal life policies that are a hybrid of term and whole life policies. You have to look at each of your life insurance policies and talk to your agent or the life insurance company and figure out which policies have equity value and which do not.
Do I just need to be concerned about whether or not the life insurance has equity value?
Equity value is not the only issue. Oftentimes, it's not even the main issue. Whether or not your spouse has group life insurance coverage through employment, private term insurance, private whole life coverage, or any other type of life insurance, you should think about whether or not your divorce judgment should require one or both spouses to maintain life insurance for the benefit of the other spouse and/or the party's minor children. For example, if father is paying mother $2,000 per month in child support and father is later killed in an accident, mother is going to need life insurance proceeds as a substitute for child support.
Is it just the wife that needs to be concerned about being the beneficiary of the life insurance?
No. The life insurance issue should cut both ways. If mother dies, father suddenly has 100% custody of the children, he is going to need funds to support the children, even if he has a good job. There may not have been a child care expense before mother's death because mother had the children in her physical custody most of the time. After mother's death, father may have a child care expense and no support from the other parent to cover that expense.
What if we don't have any life insurance coverage when we get divorced?
Well, even if neither party has any life insurance, each spouse should consider getting some life insurance. If you're relatively young, you can get a fairly large amount of life insurance that is not very expensive. You can always go online and get quotes to give you an idea of the cost.
What if my spouse won't agree to provide life insurance coverage as part of our settlement agreement?
If you have an uncontested case, both parties have to agree on the settlement terms, including life insurance coverage. If your spouse won't agree to provide coverage, you can get coverage on your own. which I will discuss in a bit. If the life insurance issue were litigated, the judge would have discretion to include or not include a life insurance provision as part of any support order.
If my divorce settlement agreement is going to include a provision for life insurance coverage, what would it typically say?
If child support is part of the divorce judgment, a common life insurance provision in the judgment may require one or both parents to obtain and/or maintain a certain amount of life insurance coverage until the youngest child is 18 years old. For example, if father is paying $2,000 a month in child support for one child, and that child is 6 years old, a total of $288,000 of child support may be paid over the next 12 years until the child turns 18. The judgment may require father to maintain a $300,000 life insurance policy until the child turns 18 years old. The same sort of approach could be used to determine a reasonable amount of life insurance coverage when spousal support is owed.
Who should be the beneficiary of the life insurance, the children or the parent?
You want the other parent to be the beneficiary. If the minor children are the beneficiaries, the life insurance proceeds upon the death of one parent will be put into a blocked account by the court until the children become adults, and then the proceeds will be paid to them. It is the surviving parent that should receive the life insurance proceeds, so they have funds available to support the children while the children are minors. Now, life insurance can be a very touchy issue. Many parents have no problem designating their children as beneficiaries of their life insurance coverage, but they do not want their ex-spouse to receive a large sum of money upon their death. They're concerned the money won't be spent for the benefit of the children.
So what if my spouse won't agree to provide life insurance coverage, but I feel I need it? What do I do?
Well, if you feel you need life insurance coverage on your soon-to-be ex-spouse, with you as the beneficiary, and you want to be the sole beneficiary, but your spouse objects, you can usually resolve the dispute by agreeing to pay for the policy yourself. If you agree to pay the premiums, there's really no legitimate reason why your spouse should object. All your spouse has to do is to agree to cooperate in obtaining the policy. For example, agreeing to submit to any required medical exam. You will be the owner of the policy. You can decide what kind of policy you want, whether it's term, whole life, universal life, or whatever, and you can decide the amount of coverage that you want. You can also decide how long you want to maintain the policy. So buying the policy yourself is a good option.
One final point should be made. Whenever you're dealing with life insurance issues, you must be very careful about writing an enforceable life insurance provision. Hundreds of thousands of dollars may be involved. If the settlement provisions are vague, it may end up costing you a fortune. You may want to include a provision in the settlement agreement that allows you to confirm once per year that your ex-spouse is actually maintaining a life insurance policy in accordance with the terms of your settlement agreement. We include sample life insurance provisions in our Marital Settlement Agreement template, which is discussed in a later video.
This has been a presentation by freedivorce.com.